Hello, this video is going to be discussing the Friday, May 30th, 2025 SPX CBOE Index trading session and trading 0DTE puts and calls during that session utilizing the day trading GPS S&P 500 SPX Index Daily Key Levels Indicator. Okay, so first off we have a 2-minute chart here up of the SPX main CBOE index. The levels come out daily at 9 a.m. And the way that that's done at 9 a.m., 30 minutes before the SPX index open, is that the indicator also works on a secondary symbol, which is the SPX 500 8-cap symbol on TradingView. Now at 9 a.m., when you have your indicator up on the SPX 500 8-cap, you'll see right at the 9 a.m. transition that the levels for what it's on the chart, the SPX 500 CFD 8-cap, will be on the chart, as well as this table down here for the levels for the SPX 500 8-cap. And then you also get a secondary table at 9 a.m. of the CBOE main SPX index and what the levels will be for that. So this gives you a 30-minute jump on the levels before the SPX actually opens at 9:30 a.m. Then at 9:30 a.m. the levels will show up, the same levels here on this table show up on the main SPX index chart. The reason that we cannot display the levels on the main SPX index chart until the 9:30 open is that the way TradingView PineScript works is that even though the indicator already knows what the levels are going to be at 9 a.m., they cannot display on the chart until that symbol has its first tick. So if the symbol is currently closed, when the indicator already knows what the levels are going to be, it cannot display them on the chart until the first tick at 9:30. So this way that we've devised, you have a two-chart system. So you would have two charts, one with the SPX 500, so you can know what these levels are going to be at 9 a.m. and that gives you time to sort of plan out what sort of option trades that you may want to consider based on these levels for today's session. And in this particular session, for this video, we're just going to be discussing straight puts and straight calls. So these are just going to be buying puts and buying calls. These are not going to be spreads or iron condors or butterflies or straddles or anything else. Just straight puts and calls, which is what I primarily trade. But the levels are meant to help any option SPX option trader. It doesn't matter whether you trade iron condors or butterflies or straddles or any other type of combination spread, either selling and getting a credit or a debit and just having a straight debit trade. So the levels are meant to help in any type of option trade that you wish to focus on. Like I said, I focus primarily on just buying straight calls and puts, and at times I will also do long straddles, which is a combination of long puts and long calls, just depending on the level of volatility in the market and the cost of those straddles versus what I believe the expected move up or down may be. And if I feel more unsure about due to volatility or news events of which direction the market may go, or if it's just going to be a complete yo-yo session, then I will consider straddles. But most of the time, for my trading at least, I prefer just doing straight puts and calls. So just getting into it here. So Again, this is a 2-minute chart. Obviously, you could use a different chart. I would recommend something between 1 minute and 5 minute, at least for the purposes of um, just puts and calls or straddles. People that trade other combinations may want to use a different time frame, but the time frame that I opt for most of the time is something between 1 and 5 minutes, and usually a 2-minute chart. But everyone's different, and everyone has a different method of operation. But in this particular video, that's what we'll be looking at, a 2-minute chart. Okay, so as you can see here, the 9:30 open we have lined out here. We had a down move on the first candle down to the bull bear key level. It did bounce off of that. However, I'm looking because of this price action here for some other indication. So we have a close below, and in the context of everything that's been happening this week with the Trump tariffs and the court rulings and all the uncertainty, there's been a lot of moves to the downside of people taking off money, not knowing where this whole thing is headed to. So at least for my viewpoint, that was what I was looking for here, is a clear indication off of this bull bear key price level for today, 58.8661. So I'm looking at either 58.85 puts or 58.85 calls. So right here at 9:48 on this candle here, we have a candle close on the cross below the bull bear KPL. The price was anywhere from 16 to 1870. The stop loss would be a quarter level above the BBKPL. So this is the midpoint here. So a quarter level would be halfway. And I'll be showing you the chart of the actual put and call options here later on in the video, so you can also look at that to look at the pricing and the timestamps on that as well. But for right now, we'll just focus on this particular chart. So as you can see here, it did have a small move down. However, we're typically looking for at least one level to 1.5 to 2 levels before taking profit. Okay, so in this case, we did get a move down to the midpoint level. However, it did not move down to here. So in this case, we did get stopped out here at the 10:02 candle here, where it did rise back above the quarter level. So at this point, we had a stop out between the low would have been 13. So you would have got stopped out somewhere between 13 and 14, and depending on where you bought between 16 and 1870, your loss per contract would have been $300 to $570. Okay, so here at the 12:16 candle, we have another decisive move below the bull bear key price level. As you can see here on this close is below this area here on the wick of this. So this is in my opinion, a pretty good acceleration down here, showing that it closed all the way through. There was really no hesitation. So it looks like the volatility is picking up. So here you have an re-enter the 55.85 put on the cross below the bull bear KPL. The buy price was between $10 and $13 a contract, depending on where you bought in this candle. And the stop loss, again, a quarter level above the bull bear KPL, which would have been this area here. As you can see, the stop loss was never hit. So here we did get a move down all the way to S1, mid S1, S2, and then finally the S2 level of 58.4873. Now this, in my opinion, was a pretty explosive move down, especially after what was happening earlier in the session. So especially given what was happening here, there's really no hesitation. We had a little pause here, but based on these candles, letting it see if it'll hit somewhere between here and here at least at 12:32 p.m. It does hit the S2 level, 58.4873. The 58.85 put was $37 to 43.86 during this time. Close out the position. The profit here, depending on what your buy price was and your exit price, would have been somewhere between $2,700 to $3,000 per contract. Now we did get this ricochet move back up off of S2. However, we just closed out this contract here, this put contract, so I'm not really looking to jump back into calls right after this. So in this case, we did get a retrace move back down to test this level again, and this was about 12:58 p.m. So this is about 20 something minutes later, and as you can see, we have a flattening out and then a close above. So this is a retest with a move back above the S2 level. So this would be entering between 12:56 and 12:58. So this is 12:56 and this is 12:58 right here. So an enter a buy on a 58.85 call option on the successful retest of the S2 level. So here we're looking for at least a move back up to the bull bear key price level. So stop loss would either be a quarter level below S2. So this is the midpoint here. So a quarter level would be midway between here and here. As you can see, that was not hit. Alternatively, because the options were not really that expensive, you could look at putting the stop loss even down here at the midpoint between S2 and S3 as an alternative. That's primarily based on the options for the 58.85 call options not really being that expensive right here, as this being an alternative as a stop loss. If you had instead opted for, say, the 58.50 call options, then you probably would have just opted to just have the quarter level stop loss, because they would have been more expensive. Okay, as you can see here, we have approximately an hour, 15 minutes later, SPX hits the bull bear key price level, and at that time the 58.85 call option is now 13 to 13.85. So depending on where you bought, between 360 and 558, we have a profit of between $800 and $1,000 a contract on that. Now, if you're the kind of trader that is wanting to just, and as you can see, this is a full 2-level move up here. So if you were just trading and wanted to close out 100%, then you would probably just close out 100% of them here. If you were trading multiple contracts and you are of the mindset that you like to take risk off and leave risk-free runners and sell half or more at a specific profit level to lock in a certain amount of profits, and then leave the rest as risk-free runners to see where price may go throughout the rest of the session. You also have to keep in mind these are 0DTE options, and at this point, you know, it's 2:14 to 2:16, and the market closes at 4 p.m. So you have to be cognizant of that. So really when it's this late in the session, um, you want to be cognizant of that, and also, it's either you're closing out 100% or leaving a risk-free runner with taking out most of the profits here. So if you did do that, if you did scale out and you sold, say, 50 to 75%, let's say you were trading 5 contracts or 10 contracts, and you sold, let's say if you had 5, you sold 3 or 4 of them. If you had 10, you sold at least 5, but maybe as much as 8. Somewhere between 50 to 80%. It just really depends on how many contracts you're trading. If you only traded 3 contracts, then you would sell 2 of them if you wanted to leave a runner. Just really depends. If you bought 4 contracts, then obviously 2 would be 50%, 3 would be 75%. So it really just depends on how many contracts as far as what your, say, 50 to 80% selling would be. Obviously, if you're just trading 1 contract, then you just really just have to close out the entire thing. So if you did scale out and leave a runner, it did happen in this case to keep running. So if you look back to the prior action here, then you could make the case that there's a fair chance that it's going to run back up to these levels again, which it actually did. And at 3:06 p.m. it hit the R1 of 59.05.55, and at that time, if you had any runners, that would be worth 25 to 26. So the runners would have a profit of 2,000 to 2,200. Again, depending on what price you bought it at here and what price you exited at up here. It didn't make it all the way to R2. It fell just about $2.40 below that. So it did rise up to 59.2209, just below our R3 level of 59.2449 at that time here at 3:36 p.m. These would be 36 to 38.69, and the profit, if you happen to have a runner still left at that time, 3,000 to 3,300 per contract, again depending on what price you bought at and what price you sold at up here. But late in the day, this can become really dicey down here, because if you get a big strong down move here, these can evaporate very fast. So that's why you just need to be cognizant of taking profits at different levels along the way if you're not closing out 100% at a specific level, especially when you're getting later on into the session here, where there's only maybe half an hour to 20 minutes left before the close. Okay, so let's just take a look at the Thinkorswim put and call option, just so you can take a look at that. So here is the 58.85 put option. So you can see here, it's a little messy looking, only because it's a little hard to see these candles with this overlay here. But basically, this was the 948 to 950 right here. You have the 58.85 put, 16 to 1870. This is this candle here of where it closed below the bull bear key price level. Remember, we put our stop loss a quarter level above the bull bear key price level, and that's where we got stopped out here on when it moved back above and hit that quarter level. And here the price was $13 to $14, so that's where you would have had your $300 to $570 loss per contract. Here's the re-entry at 12:16, where price crossed below the bull bear key price level again, and we have during that candle a price of anywhere from 10.17 to 14.95. However, if you go back here, really during that, there were plenty of opportunities to buy between 10 and 13. However, if you want to look at it, excuse me, if you want to look at it differently with the high and low of that, you have a range of 1017 to 1495. So here's the 1232 where it hits the S2 level. We have anywhere from 3678 to 4386. Okay, and now we'll take a look at the 5885 call option. So going back to here, here's that first bounce here, 1234, is this right here. Now we just got out of our 5885 puts right here. Normally when I'm exiting out of a position, I'm not looking to jump back into another position, 5 seconds after getting out of the other one. So but I did want to show you that that is where price was as far as the 5885 call option when this happened here. So we did get a little bit of a move up. However, we did get the retrace, and then we have 1256 to 1258 p.m. and that's these two lines here, 1256, 1258. So these couple of candles here are over that time. So if your reaction time was kind of slow, you could also look at it like you had 1, 2, 3, 4, 5 candles right here that you could have jumped in at a price that was still below what that initial bounce price was back after we got out of the 5885 puts. So for here, we have 3.6 to 5.58. So 5.58 was the high, was this here, and I'm just showing you that in using 360 to 558 just to show you that even if you got in a little bit after the signal here on this retest, that you still could have gotten in between those levels. So that's why we're using 3.6 to 558. So at 1:08 p.m. SPX hit S1. So that's here. When it hits S1, 58.67.67, then these were around 750 to 773. At 2:14 p.m., that's when SPX hit the bull bear key price level, and that's this here, and we have 1385. So I'm using 13 to 1385, and that's where we have the profit of $800 to $1,000. Then we have the other levels here. 306, it hits the R1 5905.55, and then we have eventually the 336 hit of 5922.09, which was $2.40 below the R3 level of 5924.49. Okay, so I hope you've enjoyed this video. You can check out in the description the links for learning more and subscribing to the Day Trading SPX 500 SPX Index Daily Key Levels Indicator. And we also have some information on our Gold Indicator Suite, which includes all 5 of our daily key levels indicators, plus 3 additional indicators. So we have 5 different daily key levels indicators. One is for stocks and ETFs. One is for Forex and cryptocurrencies. One is for futures and CFDs. One is for the SPX index for trading SPX options. And the other one is the NDX index daily key levels indicator for those people that like to trade NDX index options. And then we also have our order block finder, our supply, demand, and equilibrium zones indicator, and then our dynamic anchored VWAP dynamic key price level indicator, which is a different take on an anchored VWAP. So all of those 8 indicators are included in our gold indicator suite. However, if you're just looking for the XPX index daily key levels indicator, then you'll see information on just learning more and subscribing just to that. If you are interested and you do trade other things besides XPX index, you might want to consider the gold indicator suite, especially the lifetime access plan for that, which instead of subscribing monthly and making a monthly payment, or annually and making an annual payment, you pay one payment one time, and then you have lifetime access to all 8 indicators. And the lifetime access on the gold indicator plan, on the gold indicator suite, also includes an additional benefit, which is that you also get access to any additional indicators, a lifetime access to any additional indicators, and any TradingView auto trader strategies that we come out with in the future. So when we release auto traders in the future, or any other indicators in the future, you've already paid the one payment for lifetime access, and your additional benefit is that when we come out with new indicators or release auto traders, you're not paying anything for those. You will also get lifetime access to all of those in the future. And we are planning on coming out with a series of auto traders later this year. We will be releasing our first one probably in the next 6 to 8 weeks, just depending on the schedule of our coders finishing up that process. But in any event, we wish you prosperity in all your trading, and hope you enjoyed this video. Thank you.